Welcome back to Community Q&A with the Herald and News. My name is Steve Rosen. With me right now is Deborah Etters from H&R Block. Welcome, Deborah.
Thank you for having me.
We're thrilled that you're here because 'tis the season for tax preparation. And we know that tax deductions are a big thing in a lot of people's minds, including nonprofit and charitable donations. Tell us a little bit more about that.
Well, with the charitable donations that you give this year, it does have to be above the standard deduction for federal, which is quite a bit higher with the new tax law. But for Oregon, we are going to be using them, so they are going to benefit you. With a charitable contribution, you must have a receipt. And if you give a cash donation of more than $250, the organization must itemize the receipt for you.
Wow, some very stringent regulations there.
Yes.
Now, what about if I were to offer my goods or services as a donation to a nonprofit organization?
So if you're volunteering, we can't take your volunteer hours, but we can take the cost of it for you, like mileage, if you have to buy a uniform, any supplies for the what you're donating. But if you give goods, such as used items, new things, then you have to get a receipt from the company. They do not have to put the fair market value. We can help you determine that, and that's the amount you can take as a donation. If it's more than $500, there is rules about how we have to list it out. If it's more than $2,500, we may or may not need an appraisal. If it's a car, you do have to have certain rules. So if you want to donate a car, be sure to check with us before you complete that donation.
And you know, a lot of people like myself, we write checks out of our checking account, either through our bank statements, etc., auto pay. Are those deductible, or do we still need a receipt?
You must have a receipt, and we can't even put it on the tax return until you have a receipt.
Okay, so some very good information to know about tax deductions and charitable donations. There's been a lot of tax law changes over this past 12 months. What are some of the big things that people should be aware of or make sure they check into?
Be sure to check your W-4. They lowered the tables for withholding, so many people are going to have a surprise when they do their taxes. We can help you with rechecking that W-4. Also, there's not going to be any exemptions this year, so this is going to make a difference on your federal return. There is so many changes, but one thing I wanted to point out, if you're an employer and have 20 employees or more, the 15th of this month that Oregon Saves is starting here in Oregon, and you must either opt in or opt out with your employees. It is a retirement program with the state of Oregon. May 15th, if you have 10 or more employees, you must be involved. By 2020, even if you have no employees, you have to be involved. So this is something that employers and employees need to check into if they don't have a retirement plan.
So those dates again are January 15th and May 15th.
It's December 15th.
Oh, December 15th
and May 15th.
Okay. So we want to make sure people understand that it's coming up quickly as of the date of this recording, and it's in progress probably when people start to see it, right?
Right.
Okay.
And it takes a couple months to get everything set up. So don't wait till the last minute in May. I'd probably start in March.
Okay. And if there's one tip that we haven't talked about yet as far as people preparing themselves to have their taxes done in 2019 for 2018, what would be that one tip?
Get all your receipts together. It makes a big difference when we're helping you file your taxes.
Fantastic. That's Community Q&A with the Herald and News. Deborah Etters, thank you so much for visiting with us. I'm Steve Rosen. We'll see you again next time.